The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Yeah, I just had to type something up there. Well, welcome to another excellent version and edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. The show where there's no bull side, no bear side, just the right side. And, of course, that's the bear side today. So that's about it. We're off about 42 points. And as the preacher from Chicago says, the chickens have come home to roost. And what else can you say? 2138 on the S&P cash volume. Not that bad. You'd think probably a whole lot more. Of course, on a Friday, we should be, if the last week or two is a indication, we should be doing about 1.9 billion shares on the New York Consolidated Tape. But we're doing about 2.4 billion shares on the New York Consolidated Tape. So a whole lot more. But if you're thinking, at least so far, that we've spooked a lot of these longs out, that they've decided to freak out today, not so much in the volume department. That means that we probably have a lot more to go. Maybe not on this little move, but my guess is that this is the start of something bigger. If we would have seen a lot of volume, I would have said maybe this is some kind of selling climax. We've got more about my 3-day rule in a minute, but I don't think you can do anything else, and we'll talk about that, why. But just sit and let it burn. Hopefully you're short. If you're not, you better have stops in. But my guess is that this is the beginning of something much larger, much bigger, on a very special edition of the Power Trading Hour. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Yeah, somebody in the den saying it. That was a Jesse Livermore saying that I loved, which is there's no bull side to the market. There's no bear side to the market. There's only the right side. And it's, you can get married to one side or the other fairly easily. So probably a good way to think about it is just stay on the right side, whichever side that is. We are arms dealers. We're more than willing to sell to both sides, which whoever needs the money. But that's kind of it. Anyway, let's get through a few of the things in the news and some of my views as the market continues to burn like Rome as Nero fiddles. What do we have going on today? Oh, we got to play our little history repeating thing.
That it's all just a little bit of history repeating.
On 1966, on this day, President Lyndon Johnson signs the National Traffic and Motor Safety Act into law. Immediately afterward, he signed the Highway Safety Act, and now we have airbags in the side doors, in the ceilings. We got airbags coming everywhere and out of everywhere. But he said, in this century, more than 1.5 million of our fellow citizens have died on the streets and highways, nearly 3 times as many Americans as we've lost in all our wars. And this is not too far after Ralph Nader published, about 2 years after Ralph Nader published Unsafe at Any Speed. Amazingly, my dad bought one of the Corvairs, one of the Spiders, the 6-cylinder ones. And while it was kind of ugly, it did run very well. It had disc brakes on it. Man, what a little, back in the I think he bought it like a 68 model maybe a 66 model, about 1972. Boy, did he like that car. He also, of course, was, many people know, a officer and a colonel in the Air Force. And they used to throw away aircraft landing lights that just by the same way would fit in the front of a Corvair. And if anybody would not turn on their bright lights on them, he would flash them with those aircraft landing lights, which were about, 10 times brighter than anything in the world. People probably think that they were put on the sun, but he was a big proponent of just blinding other people if they would not turn their high beams down. And one of the cool things he did. On this day in 1966. Other things going on out here, as we talked about it, there is at least I do a 3-day rule. And this is it. When you get a big move, and especially when you've been in low volatility, either long or short, I normally don't look for any kind of move within 3 days to counteract that move. There is a reason why, and that is as things get narrower, i.e. the volatility either up or down, the tendency for people to try to find yield by leverage increases. Over time, you can always see it. And probably the month or so that we had going sideways only got people to start using 2 and 3 and 4 times margin, whatever the broker would allow them to do. Not that many retail traders out there anymore. So I suspect what we had were a lot of hedge funds that are normally anywhere from 20 to 25 times long their positions. They were probably up at 30 or 35 times over the last month, doing anything to get any money back. Those guys will have to get out of those positions and raise some cash. And, of course, if you're a broker, or not a broker-dealer, but if you're a clearinghouse, they've got 3 days to do that. It is generally, not always, but generally unwise to walk away. And that's what I said in the open. Let them burn. Just stand back. Go to the pool. Go to the ocean. Maybe you want to take your cash now. That's fine. For me, I normally wait for more cash. And normally you get that third day out there. You get the margin calls and you get the washout. Normally, it may happen in the morning, might happen in the afternoon. What you want to watch is for a very fast market in that to watch them wiped out. But my guess is that people have been dying to get back into this market and make some cash, and they are probably way too many people on the wrong side of this boat. I think we also have another factor that I talked about many times, and that is why I could not be long. We've talked about it for, 2 weeks? That is that there weren't very many shorts. In fact, extremely few shorts. The market kept on trying to get up there and get everybody short at the highs. No one would short it. So what do we get? We get exactly the kind of action we get now, which is, guess what happens when you don't have any shorts that naturally have to buy to get, I'm using a broad brush here. There isn't no shorts, but very few shorts, right? So what happens when the market comes down? Well, the longs, they're a little scared, and you don't even have the shorts to cover on the downside. And that's why you get markets that move as fast, as quickly, and as deadly as this. And then you get into the margin sellers, and it just kind of feeds on itself. A little bit more about this when we come back. Let them burn. Just let it burn. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what do we got going on? We're talking about 3-day margin calls and the tendency for both long and shorts to pile on additional margin in lighter volume markets, thinking that they've got to make money somehow, like they're working for an hourly wage. Another great Jesse Livermore-ism out there. And, of course, you're not working for a daily wage. You're not working an hour, or at least I'm not. Some people trade every day. Some people wait for the big, fast ball down the center of the plate. We did bring out the elephant gun yesterday in the daily newsletter to short this market. We talked a little bit about why during the show yesterday, and that was a little bit about IBM and Apple and some of these others rolling over, and the very narrow winners in the market. So we'll take a look at those in the chart portion of the show. But 3-day margin calls, my guess, and we'll know fairly quickly, is that we probably have a lot of people on the wrong side of the market. Normally, they'll hold that market down, or no one will step in, let me put it that way, for a few days. And what they will do then is be, no reason, if you're going to put money to work, no reason to stomp all over everything. You're getting a discount if you're bullish. So just wait a little bit. And, of course, we got to the end of fund buying. There was no real movement out there. We don't have a lot of people that are long this market, or let me put it this way, a lot of people that are retail traders that are long this market. They didn't go short, but they, from Ameritrade and the other broker-dealers, as we reported this week, you saw them start selling right after the bottom of the British exit. We've talked about, I think, who was it? Vernon Smith earlier in the week too, who did the experimental economics with trading. And he did say people did tend to learn after a few times of getting burnt. And it certainly looks to me like the retail traders, at least, will be a lot less burnt than the guys that were trying to get yield at any cost and now are on the wrong side, and things are probably even worse. But I don't think we're dealing with the retail crowd here. I think we're probably, if you're looking at it, you're probably looking at a lot of people that are extremely long on lots of leverage. And that is going to take a little bit of time to get out the other door. But when you're on the wrong side, you are swimming with sharks, and they will not let you out very easily. I've been on the wrong side too many times, and they never let me out very easily. That always made it hard. I'm going to have to play that song now, Rolling on the River. We never did it easy. We always did it hard. Anyway, 3-day rule. Hang on to that. Google, kind of interestingly, has a, in fact, I got it up here so I can play it. In a little bit of news, has come out with a way of making text-to-speech, at least in English and Chinese, 50% better, they say. I'll play it and you can tell me what you think. But it does sound a lot better. Their idea, of course, is to make a lot of human interaction with movies like Her and Ex Machina that have been out for a while. This is from a company they bought about 2 years ago. They spent about $500 million buying it. But they've got a lot of examples. If you want the link, just email me at path@tfnn.com and you can play their examples out here. But I'll play this and see what you think.
The Blue Lagoon is a 1980 American romance and adventure film directed by Randall Kleiser.
You can still tell that it's electronic, but is it good enough? I think it's getting awful, awful good. But there's been a change in machine learning, and basically all the big things that have happened the last few years in that segment have all been done on what are known as convolutional neural networks, and this is yet another big breakthrough based on that. But pretty interesting. I don't know, $500 million? I guess wrapped into the other stuff that they do, probably going to make a big deal in the near future. Certainly better than the voice that they use on Google Maps, so we'll think about it. Other things going on after the bell. Next Thursday is Oracle. If you were thinking that someone was going to come along and have monster earnings to save us, that is the next big earnings coming out. So no real news that I really see, anything else that really brings us out of this funk for a while. I think you could say, what is it, the Fed's, on the 22nd or 23rd? So we've got a while to go. There's not going to be a lot to push this market around in the way of news. The Fed should be in its quiet period after today, so you shouldn't hear any more people, actual decision makers, saying anything until that Fed period is over. And with very sparse earnings and probably not anything like job numbers, we're going to go into expiration next Friday without a lot of cross currents in this market that probably will change much. Anyway, that is the snooze part of my show today. Let's get right into charts and see how some of these stocks are reacting. As we said earlier today, some of these charts, and the reason to go nuclear yesterday in the short-term newsletter was a lot of these stocks that looked like they were starting ABC downs. As we've said for, I don't know, a couple of weeks here, we were looking for IBM to come back down to at least this gap at 153. You've got a couple of gaps down below. Volume not that exciting so far today. Like I said, volume is not that huge. It's certainly huge compared to last Friday and the previous 3 Fridays as we get out of the summertime. But it'll be a lot more interesting to see what happens in the end of it. But that's one of them. Of course, we looked at Apple, too. And when we talked about this one, you really had to think, that's it. I've been looking for this thing to come back at least into its double gap at around $100. I think that's probably where you're going to find the first support level. Going into expiration, my guess is they'll pin this thing at 100 if we don't get any kind of change or anything else out here. Got a lot of other stocks to look at. Facebook kind of rolling over. Facebook was the last stock really to get any love. In fact, it got all the love that I could tell during fund buying. Did go up on volume, 26 million shares, but that was compared to the 78 million shares that we had on the 28th of August. And that was on earnings. It's done nothing but go sideways. It's now back into that trading range. So you've got a definite sell signal if you've been long for a while, we'll say back at this 108.23, June 27th low. But this kind of, on the best case scenarios, on the best stocks, we've kind of gotten this already. On the other stocks that have already been headed down, we've got some very bearish signals. We'll look at the IBB when we come back. Give me a call, 877-927-6648. Email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. Anyway, Facebook, one of the other ones, we'll take a look and see how the FANGs are doing here today. Amazon, pretty ugly too out here. You can make a case that you've got some dark cloud cover And this is really headed back to about $742. That'd be the center of this gap up on 728. Not that bad of a pullback, at least not so far. Take a look at Microsoft SFT. This really didn't have the kind of volume that we've been looking for since it broke above the $56 level. It's not going to surprise me to see this come back down into this $56 trading level. Right now, kind of sitting on the top of that high from April 19th. That had 29 million shares. Today we've got, about 17 million shares. It may take a couple of times. Again, the FANG stocks are what everybody wants to buy. It'll be the first thing everybody piles back into. I can think of other stocks to be short. Wrote about a little bit of some of the new stuff that Microsoft's working on in the Tech Insider today. So I think there's lower hanging fruit out there. We talked last week when the IBB all started headed downtown about Milan. The senatorial investigations have been set. I don't have the dates, but my guess is they're going to be somewhere about midweek next week. Look for Wednesday or Thursday. I think we'll know when we come in on Monday when they'll be. And I'll try to let everybody know. But Milan is not off the whipping post yet. They're going to drag them before the Senate committee and maybe even a congressional committee. But I think the Congress leaves earlier than the Senate because there's so many more people that are facing re-election on the standard every 2-year deal. So they're leaving a little early. They may not get before Congress. But certainly you're going to be in front of the Senate. It's not going to do anybody any good that's in any biotech that they increased their price from $60 to $600 and then offered it at $300 as a deal. It's still going to be a very hard case to press, and I suspect that a lot of discussions about that are not going to do any of those biotechs any good. But look for that in the mid part of next week. We'll look at some of the stocks that I had that I was interested in looking at, mostly because they had broken above previous highs on light or very light volume, giving pretty good sell signals. ZAG was one of the bigger ones out here, 1.9 million shares on July 21st. That was at $7.73, spiked a couple of days ago with 565,000 shares. Didn't have a lot yesterday, but again, back to that. But what are you looking at? A lot of these have some gaps. This was a good sign of strength, not an excellent one. Back on the 3rd, you would look for this thing back at $6.70. And kind of a long walk back for a lot of these. Westlake Chemical, some of these other ones with a lighter volume that look like they've topped out. April 21st, $52.82. 2.2 million shares, spiked it with 1.5 million shares. It's kind of rolled over and down today. Volume okay. By the end of the day, that one looks like it will be at least decent volume to the downside. Even stocks like Wendy's that have been tied to the whipping post have challenged their recent highs. The August 9th high, 6.1 million shares, $10.30, got challenged on the 7th with 4.7 million shares. This one will probably hold up better than the rest. If people think that the economy's going down, probably look at, in fact, let's look at McDonald's and see how it's doing today. See if the safety trade is doing anything for it. And it's down on light volume so far anyway. But looks to me like 113.96 is what you want to see this test, which is the August 26th low. And, you're not bad. The June 27th low at 116.08 had 14 million shares. We've never, ever really gotten that as this thing has gone back down. So you could see a nice little pop, a few bucks in that. I wouldn't be buying it, but Again, I'm looking for the long ball. What else do we have out here? Unified Natural Foods. I think some of these are getting ready to come out with some earnings. I'll have to check on this one maybe during the break. But there are a few stocks out here that do not look all that bad and continue to look fairly decent even into a horrible day like today, which we're still off 40 some odd points, 2.65 billion shares. This one had a nice sign of strength back on June 7th with almost 5 million shares. We're back into this with 500,000 shares today. So if you are looking for stocks possibly to get into, I don't know if there's enough meat on the bone for me to get all excited. I want to see 25, 30% to the upside. Could you get that? Might. But if the whole market's pulling back, that's going to be tough. You're going to need me to be very wrong about being on the bear side out here. Thermogym, another one of these biotechs out here, spiked with massive volume yesterday, but kind of looks a little bit more like an exhaustion day. Just a little doji out here, no follow through. We talked about SodaStream out here. Also not another, one that's looking all that bad. Gapped up with volume on August 2nd with 3.8 million shares. Back into it today with 140,000 shares. I don't know what's up with this. Maybe a buyout play. Someone thinks it's a buyout play. But now, if you were short this one, probably time to cash in the chips no matter what. Sabrina Health. Now, this one, pretty light volume, but pretty big destruction. And a lot of people that had been buying this over the last 7 to 12 days pretty much out of the running. The last major high was September 21st, 2015, at $25.90 with 500,000 shares. Got into just 350,000 shares on the 7th and has rolled over and back down. Sabrina Healthcare, SBRA, a little known stock. Was thinking that this one would roll over a lot harder today. It has not. Sanmina, down on monstrous volume on the 26th of August, 3.5 million shares. Done nothing out here. But this one, if you were looking for something that should have probably got smacked down and did not, that's it. On the cruise side of the business, on this fall's recreational and vacation planning, Royal Caribbean Cruises. We're not quite to that point, but in another 15 days to 30 days, we're going to know a lot more about how Zika has influenced people going on vacation to southern climates. This right now does not look all that bad on the charts. So maybe Mr. Zika is not as bad as we thought. We'll take a little look at this more.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And a question that's not really, I guess it's tech related. Do I think that Russia is the one that's been doing all the hacking for the election and all the other stuff? Well, it's probably one of two countries, both of which the Obama administration tried to kind of overthrow by putting cash in the, the 2012 elections. We threw a couple $100 million into trying to make things tough for Putin. And, of course, $250 million just last year in trying to overthrow Netanyahu. Both of those countries have huge internal CIA-like abilities when it comes to hacking. Both of them were basically messed with their elections. I could see either country, both sticking its thumb in our eye this time for the exact same reasons. So, if we do it to them, I think that they think they could do it to us. But we've got two of them, either one of them. The only reason I'd even think that the Israelis would do it was because they released all the stuff from Soros and his connections to funding Hezbollah. And I don't know if the Russians would have done that. But, the very interesting Soros emails out there and what he's involved in. Real James Bond kind of evil stuff out there. What else is going on out here? We'll look at some other. Oh, we were looking at Royal Caribbean. 6.2 million shares on June 28th, $64.95. 6.2 million shares, just 3 out here today. So there are a few stocks that look like maybe they are bottoming out. We'll watch this one over the next couple of days and check in on the show. This one kind of got close, but didn't actually pierce the high. Neighbors Industries. This one was $11.21 with 8.8 million shares on June 8th. Got 19 cents short yesterday, but only 5.8 million shares returned. Volume is starting to pick up. Again, probably a lot more. It's Friday. Volume's going to be low. My guess is it's going to tell us a great deal more about what happens on Monday and the volume coming in on that. But again, I suspect that probably as a low, maybe Wednesday would be, if you're thinking long, would probably be the time, would be the first day that I would think about maybe pulling back into this market. Also a question during the break, what am I showing for options out there? And I will bring that up out here. But pretty much the SPYs all week long have been showing a move back to about, well, at least, yeah, the SPYs to 212. And that looks been fairly tight. I'll show you the chart here, because I think that's what the people were asking for in the email. Let me zoom in here a little bit. But you got kind of 2012 out here. And I think from what I've looked at in the rest of the options, that's probably not too far from what we're looking at. What are the spies at right now? SPY. Where is my spy? And we're at 214. So probably about 212 is where the options are parked right there. And that would just be break even for most of those for expiration next week. Now, when you go into October, though, it goes back up to about 218. So at least at the moment, options are kind of saying that we're in a trading range from what I was looking at, which is around 2120 to that 2180 mark that we're in right now. So, yeah, 2120 kind of about where the bottom of this should start to form in the S&Ps, and that's why I think there's a little bit more meat on the bone to the downside. Could we get to 2100 is another question I'm getting. And I think, yeah, I think we could get to 2120 and then close out Friday at 2100. But in fast markets like this, you have to be nimble and willing to back up on yourself fairly quickly. But I think 2120, I'd say 85% chance we hit that, which is pretty high. So like I said, I'm going to sit on my hands for at least a few days out here as we're going back in to test the low of the day right now. I think it's going to be very tough, as many people in the den have said, to sit on your hands if you are long and look at this kind of move and think maybe you get 2 more days kind of like this, which is not uncommon. I'm just thinking maybe we get this day down, maybe a little drift more down next week. If the volume lightens up, then nothing. If volume picks up, then the new character after the 3-day weekend that normally comes after a 3-day weekend are these, probably sideways days and then a big gap down. And then one more maybe. Maybe we're in a 3-gap play to the downside. I would not be surprised to that either. MRC Global, $15.14 was March 11th high with 2.7 million shares. Got into it with 1.2 million shares on June 23rd. Again yesterday with 1.7 million shares back in the trading range. Big gap down there at 9 that I've been kind of eyeing out there. Marathon Petroleum Corporation did not like the way that this thing yesterday tested its high at all. And I thought about it for a while. Andy Heck, my brother from another mother. And what do they say about Andy Heck?
Oh, well, he's very popular. The sportos, the motorheads, geeks, bloods, wastoids, dweebies, they all adore him. They think he's a righteous dude.
He is a righteous dude. On his show, he had a question. Don't you think that the hurricane had a great deal to do with the pullback in oil? I mean, in the reduction in oil. And, I hadn't thought about that. And pretty much when it hit me, I was looking at this marathon chart last night during his show and saw that. And I thought, you know what? That's probably the best explanation I saw of crude bouncing on Wednesday so far, most likely. Anyway, so when I saw this testing the $43.26 high of April 28th that had 7.9 million shares with 4.8 million shares yesterday, very interesting. Now, I thought that there were better shorts out here, so I didn't pull the trigger. But I was thinking, well, it doesn't look very good. The energy is off from the February 9th leg to the April 28th leg if you compare it to the June 15th leg up to yesterday's high. It was off about 10% or 5%. There are a lot that are way weak from these June 15th lows and the British exit lows, and those are the ones that I'm focusing on to actually pull the trigger. But any pullback in crude does not hurt the shorts of the general market. What else is going on out here? The Dudaboids certainly does. What else is going on out here? And he hated the Eagles. They're doing a They want to do a redo of that. The Dude. What a great Coen Brothers movie. Anyway, we're going to break here. Our last segment, we will look at a few more stocks here. 2138 off 43 points. Volume 2.8 billion shares on the New York Consolidated Tape as we get into the home stretch with our third
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Had a question in the den from Danny in Atlanta, who loves Boeing airplanes, by the way. Says that he won't do anything but fly in a Boeing, or he ain't going. About the GDX, and my opinion has not changed. You got this double gap right at about $23.50, and I'm pretty sure that's exactly where it's going. You had high volume there. You've got a double gap that goes back out. Yeah, I mean, the day you want to look at, because this is the day that sets up probably the center point of that gap, is the 23rd of May. What was the high of that day was 24.24. The low of that day was 23.36, and that sets up right in the gap up, which goes from 24.08 down to 22.97. That's the gap on June 6th, and that's really what I think, these stocks like these Wyckoff patterns now. I mean, they're coming in so many different places, and they're all setting these up. If you're unfamiliar with the standard Wyckoff pattern, it is you have a lot of volume with a gap up or a lot of energy up, a big sign of strength, which you had on the 3rd of May or 3rd of June out here. So you have huge volume that day, 189 million, let's call it 190 million shares. So you get almost the highest volume we've had here in a few months. It gaps up on that, comes up all the way up to the top. You come back, you bounce off of it the first time with 130 million shares on September 1st. So you know you're probably at least getting back into that candle, which we are today. But that first bounce off of that into that candle, normally you get 2 or 3 of these out here. So my guess is you're going to see this thing kind of bounce, wait for the energy to come out of it 2 or 3 times, but your buy would be right around that $23. No problem. And I can't wait to ride in an airplane with you as long as it's a Boeing. MGM out here. We have an Airbus Boeing war going on in the den for some time now. 6.7 million shares for MGM. This one had really I've been looking at this because we started to see weakness in other sectors. June 9th, $25.29, 6.7 million shares. Got into it with this 4.4 million shares yesterday. This did break the previous high. It's come back into the trading range. So a standard Wyckoff pattern out here would apply, i.e. you're on a sell signal on MGM. You know, there's been a lot of push for those stocks in the gaming community, but Wynn had looked kind of horrible, and actually one of the few stocks up today. But just because they've got gaming in China doesn't make me think this is any better. Maybe just because this is out of the United States. I don't know, maybe this thing's getting a little bit more support. I think you could put a case in for Wynn, maybe making an ABC down too, but at least the U.S. Casinos not looking that good. Wanted to get a chance to get into the railroads, but we've run out of time for that today. Maybe Tom O'Brien will take a look at them in the next hour. I'm sure you'll spend a lot of time on gold. But what else can you say about that? But have a good weekend. We will see you Monday, same bat channel, same bat time. And, of course, always sell when you can. Not like today when you have to. Maybe. Hopefully you don't have to. But we will see you Monday. Have a great weekend, all.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.